Mario Draghi, as expected, announcing a program of quantitative easing. The surprise has to do with the size of the monthly purchases and the time frame over which the European Central Bank will be conducting this exercise. Starting in March, the ECB will be buying $60 billion a month of bonds, including sovereign debt, as well as asset-backed securities and covered bonds. That's my understanding. It's an expansion of previous monetary programs. And this $60 billion a month of purchases will continue through September of 2016. We had an idea how this was going to work out yesterday. What we thought we knew then is different now, and there has been market reaction. We'll show you what's going on with the euro in particular, some volatility on an intraday basis. I want to get some reaction right now from a terrific guest. These are the kinds of people you can rustle up at the World Economic Forum in Davos, Switzerland. James Gorman, the chairman and chief executive officer of Morgan Stanley, sitting right beside me. James, like I say, a bit of a surprise. Not a surprise that the ECB is doing quantitative easing, but the amounts, the time frame, a bit of a surprise. The euro trading down. It's very difficult right now to evaluate the effectiveness of this program. Do you think it's going to help Europe as much as some people hope?
Well, it's certainly, it's a positive, right? We've been waiting for something like this. We've now got it. Draghi is showing that he's earnest, which is good. They're taking it very seriously. It'll be interesting to see the details of how they're sharing the sovereign risk and so on. But I think for now, let's just put it down, Eric, it's a positive. This is $60 billion. It's not a huge surprise on the upside, but it's positive to what people were expecting. The euro will probably trade down. I think it's good for the markets.
Will quantitative easing in Europe inflate financial assets there the way that it has in the United States?
I mean, it should do, but we've got some broader issues in Europe that we didn't have as much in the United States, and they're obviously structural. They're fiscal issues. We've got greater concerns now around the enduring presence of the euro and, you know, the elections in Greece this weekend. So there's a lot of uncertainty and volatility. That said, this is a very important first step and a necessary step.
If we see money flowing into European stocks, is that going to help your business in Europe?
We're a global business, so honestly, that's not what is going to be a particular driver in terms of our overall firm. What I'm interested to see is that investors, institutional and retail investors in Europe, see some appreciation in the market. So that would be a sign of stability, net worth appreciation.